My name is Navin Prithyani. I am from forexwatchers.com, and it's great to be here today. Thank you so much, FX Street, for having me here once again. This is part two of a two-part series webinar. If you haven't seen the first part, there is a link on this current webinar. You'll see the link for part one over there as well. So before we begin, let's get to know everyone. A little bit because I'm no longer in London. I'm out in China, and it's New Year over here. Give me a second. Let me try to close the windows. All right. So yeah, it sounds like a little war zone outside, but it's New Year's out here in China, so there's a lot of fireworks going on outside. So yeah, I'm back in China now. So those of you who are in Hong Kong or in Shenzhen, do get in touch with me. I'd like to meet you guys for some lunch or dinner. And before we begin, let's. Thank you, FX Street, for the part one's link. So where's everyone from around here? Is my screen visible still? So I'm on a VPN. I don't know if that might cause an issue, but we'll give it a shot. Okay. London, Peru, UK, Guildford. Okay. London, Amsterdam. Oh, hey, Matt. How's it going? Nepal, Singapore, Budapest, India. Good. So we got a good range of people in here today. Getting quite a bit of attendees still coming in, so we'll ease into it. So in part one, okay, we got a couple people from the States as well. So in part one, we discussed more of the basics, such as like support and resistance and stuff like that. Now, what we're going to get into today is part two. I'm going to be asking a lot of questions with you guys. I'm going to do what I normally do with my members at Forex Watchers. I do a little reverse psychology training, so you can get more of the aha moments. We have 45 minutes allocated to us, and we're going to make the most out of these 45 minutes. So if there's anything you don't understand, I would recommend you put it down, and I will stop and I will repeat if anything, if necessary. Otherwise, everything is recorded and you guys can watch it. So if you can, keep the questions to the minimum, and we can go over them towards the end. And today we're going to be talking more about directions of the market. How do we understand what the flow of the market is and where the markets are headed? Okay, so we'll get into more of how do we read the market rather than what's it doing? Okay, South Africa. Hi, Abby. How are you? All right, so let's get started here. Let me open up one of these charts. Did any of you guys take the trades from last week? I believe I mentioned I gave out 2 of the trades last week. Or sorry, not last week, last month on the previous webinar. Okay, so let's get started here. So now, first things first. If I have the markets coming down like this, and then suddenly they go up like that, what is that called? What is that called? From your understanding of the market that you have as of right now, what would you call that move back up? Okay, swing, retracement. Okay, so many of you guys are saying retracement, right? Okay, good. Now, what does a retracement mean? Let's get into the science of it. Not just we know the word, but what is a retracement? What does it actually mean? Okay, so a retracement is basically, well, there's two sides to it, and one is profit taking for the sellers, and it can also be an area where the buyers get in. And there's a big difference here. Okay, so a retracement can be caused due to profit taking from the sellers, and or it can be caused due to buyers coming back in. Here's an example. Now, the markets are coming and then they pull back. So the sellers are taking profit. But what if this was in a range? Wouldn't was a buyer here would try to buy it again from here, right? Like range trading. Okay, is the audio okay for everyone? Yeah. Okay, I'm gonna keep going. If I get quite a few people saying the audio has a problem, I'm breaking up. Okay. Let me try disconnecting the VPN. One moment, yeah? Okay, can everyone still hear me and see the screen? Okay, this should make the audio a bit better. I'm not using the VPN right now, so let's give it a shot. Okay, so there are buyers who get in again because this is a previous buying area. So not only can this represent sellers taking profit, but it can also represent buyers coming in. Now, both of them are very, very unique. Okay? Which means, okay, we'll get into what it means later, but they're very, very unique and they're two separate things. Okay, now, if there is a pullback, what do most people do? How do we trade a pullback? What's the traditional way to trade a pullback? Okay, fib levels, right? 50% on average, 50, 36, that's 61.8, and et cetera, et cetera. So now, most people use fib retracements to trade this, but what happens if it retraces 50% like that? Okay, people are looking to sell this thing. Okay, fair enough, but what does that mean when it retraces 50%? Good. Now I'm going to share with you guys a little technique that I use to explain to my members. We call it the rubber band man. Okay. Imagine the trend is like a rubber band, and someone pulls the rubber band all the way down from here. It comes all the way down here, and then it can get only this far. Once it gets this far, it reacts, it retraces. So now his maximum limit of how far he reached is here. That's how far he pushed. Imagine if he's a runner with a rubber band on him, and he runs this far, and then he gets pushed back. He regains his energy and pushes again. Now, if he breaks his previous record, we can tell that the trend or the rubber band man, he still has power to go. Okay? In the industry, we call this momentum. There's still momentum in the market, but screw that word. I hate traditional words because most of the students that come to me, they have all this traditional jargon in their head and they're really confused. Okay, so we're going to get into more of what do things mean. Okay, so it can really make you understand what's happening. Okay, now think to yourself in that same concept. What if the rubber band man comes to here only? and it reacts again. Would you really say he's got some strength? Would you say he has some strength? Right? So now when he retraced last, he got up to here. Okay, when he retraced last, he got up to here. Now, the next time he retraced, he got up to here. Does it also mean that he's lost power? So there's two sides to this. So he's slowing down, but he hasn't given up yet. Does that make sense? So he's slowing down, he hasn't given up yet. Now, think to yourself even further. The first push comes this far, and then the retracement comes in like that. And then the second push. How much do you think the second push is going to have some power? Do you think he has much strength left? Will have less power, right? So when you think in those terms, it's like, okay, maybe he won't have enough power to keep going. Okay? So maybe he won't have enough power to keep going. So these things make a big difference of how much does the market retrace. And it's all about beating its record. So now let's bring in more picture. Yes, that's Martin. That's also a good way to put it. He needs to rest to gain more power. Now, if someone does this, okay, analyze this situation for me. I want you to analyze the entire situation for me. Don't just look at it like, oh, it's a lower low, it's a downtrend. No, that's newbie stuff. I want you to analyze the entire situation from top to bottom. What happened? Okay, MRC, it is strong. Okay, but what does that mean? What is happening swing by swing? He had tremendous power to move, loser fast. Power is reducing. Needed to rest twice. Profit taking. Okay. When it came down, he had so much power. Look at the amount of rest he needed. Very little, 5 to 10%. Then he pushed. This was his previous record. He made a new record, all-time lows. And then look at the amount of rest he needs now. It's much more than the previous time. Okay? And if it goes on like this again, can we start to expect that he might not beat his own record anymore when it starts slowing down like that? Right? So these things, when you keep them in mind, it helps you understand how strong the market is and how much flow is there in the market. Okay, we can't just look at this as, oh, it's a downtrend, so keep selling. No, 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 don't just keep selling. This will tell you, be careful. We need to slow it down. We can't sell as aggressively anymore. Does that make sense? Everyone with me so far? Okay. Good, good. So now let's like the USD CAD in inverse. I'm looking at Euro Pound right now. We'll do mostly education today instead of live analysis. I know last week we did a little bit live analysis towards the end, and I gave you guys some pairs. I don't know if I'll do that today. So we'll skip on that. We'll stick to education a little bit today, yeah? So now, this time, look at what Euro Pound did in January. It came down from here to here. And then the retracement, okay, 20%, 30% maybe. Then it made new record lows. And then look how much it retraced after that. What percentage would you say this next retrace is? 50, 75, 60, in that range, right? Look afterwards how long it took him to beat his previous record, which was here. Not so smooth, right? These are signs of markets slowing down and getting ready to possibly churn, or what we call trend refresh. A trend refresh is the markets will go into a range and then resume the trend yet once again. Okay? Okay. So, having that said, if the markets in this particular one, they're down, and the retracements are in an upward motion here, what is the big picture? Big picture says down. Small picture says little bitty up, deep retracement. Little bitty up, beat the previous record, retracement 50%. Up again, beat the previous record, came down shallow. Up again, slightly higher, beat the previous record, and then came down collapsing. Okay? Now, this whole thing is at a 50% mark. And each step of the way, it's showing you it's pushing and pushing and pushing. Okay? If you draw an uptrend line, okay, you see the uptrend line gets disconnected at this point here. Okay, the flow ends and it resumes the flow of this guy. Now, as it was going up, can we say the trend is up? No. It is very important to understand where the flow is coming from. The fact that the flow down was smooth like that and the flow up is a struggle, it's a good sign. It's telling you the sellers have a lot of money. You know, they're not letting the buyers get through. Does that make sense? Yeah, sorry if the screen is lagging a little bit. Just I'll try to slow it down a little bit more. But hopefully you guys are still getting the concept of what I'm trying to say. Okay, so it's a good sign when we see stuff like this. It's the buyers keep knocking it down again and again and again, and finally it gets through. Okay? So, but we cannot forget this boy here. He is the main reason why this thing is struggling. If we just focus on this upward motion, then all we're going to think is, oh, the market's in an uptrend. Let's just keep buying. And, you know, this is going to cause problems, a lot of problems. Abby, Navin, should we do this for higher time frame as well, or do we need to focus only on the current time frame, for example, 1 hour? You need to know, I use multiple time frames to really read through the market, but for the sake of today's lesson, we're not going to get into that. We're just going to keep focused on, if this was your chart, now, without looking at this up here, okay, whatever that is up there, whatever number that is, whether it's daily, weekly, 15 minute, 1 minute, or 1 second, how do you read a chart? Okay? How do you read a chart? That is the most critical aspect, because we're discussing complete pure technical stuff. I'm not getting into fundamentals. So, but if we're going to discuss technicals, you know, if you've seen the description of this webinar, I shared what I really feel is that really, truly, a lot of the members that come into the microservice at Forex Watchers, they're hoping for me to give them some sort of electric shock, and then suddenly they're like, ta-da, I'm a magic trader now. Unfortunately, it doesn't happen, you know? And the core reason is the basics are absolutely like all over the place. Because what is everyone focused about? Now, when I explain this up and down, then up and down, you know what most people look at is this piece here. Yes, that's where all the focus goes on. Is like, oh man, if I would have caught that, I would have made a Ferrari. That's where all the focus goes on. So they keep ignoring the basic concepts getting to that part. Okay, of why certain things happen a certain way. And then this all becomes, oh, okay, well, it's a support equals resistance area. We just sell at support equals resistance. It all becomes location. But it's not just location. It's how did we get to that location? Why is it getting to that location like that? Who is controlling the market? What is happening? When you read the market, you have a lot more over the next guy on the other side of the market. Because there's tons of people out there who are short-term gamblers. They just want in and out, hoping to make a quick buck. And trading is a zero-sum game. Someone has to lose for you to make money. So don't trade the way they trade. Be better, be smarter, and take your time to do it. No rush. Okay? All right, so let's take a look at another example here. Okay. How do we read this market here? Would you say from the left side of my screen, would you say this is an uptrend or this is a downtrend or it's a range? How do you view this? What comes to your mind? Let's make it a little bit complex and tricky. Okay. Range. Okay. Pan says range. FFMC says downtrend. Range, lower high, range down. Okay. Now, for those of you who say range, your eyes are looking from here to here. Correct? Most likely. For those of you who are saying downtrend, your eyes are focusing on this aspects within the other people's range. Which one is correct? Now, this is definitely a downtrend. What I drew earlier is definitely a range. What's the right answer? For those of you who, if you want to say uptrend, well, this is definitely an uptrend. So what's the right answer? Which is it? The down channel? Okay, so let's start from here. Okay, some of you guys saying depend on time frame, go up a time frame. No need to do all of that stuff. If you have this chart and I tell you trade this chart, there should be no reference to a higher time frame or lower time frame. What's happening on this chart? Where's the market going? Where's the money flowing? So let's take a look at this. First, the money the money flows upwards very smoothly. Then the money comes down and then struggles, and then struggles, and then the buyers attempt again. Now, previous record, this high. After the sellers take their turn, the buyers attempt. And the buyers fail. Now that the buyers fail, our eye focuses on what's going to happen here. Okay? We're not quick to change the direction because up until this point, the ball is still in the buyer's market. Right? We're going to read this piece by piece to understand what is happening. Okay, following this stage, what happens next? The sellers take over and they push it further down. They beat the previous record of their last sell. They push it further down. They take their turn. Now, they got to here. Did they overcome this guy, where the buyers initially started from? Did they overtake him? Well, if I draw Fibonacci on this, where's my Fibonacci? Here we go. If I draw Fibonacci on this like that, doesn't this look like a perfect Fibonacci number anyways? It should still be in an uptrend then, because it hasn't broken below this area, below 100%. Okay, so keep that in mind so far. Okay, the buyers have not lost yet. The sellers are just trying. Think of it this way. The sellers tried several times. They're struggling down and then up. They're struggling down and then up. Doesn't that actually mean the sellers are having a hard time to come down? Yes, they are pushing very deep into the buyer territory, but they're struggling. They're not as smooth as how the buyers came up. Keeping that in mind, we're going to see. So they tried, and then the buyers start to come back. And they start making their moves with higher lows and breaking their own levels. But look at these tails showing up every single step of the way. Now, when this goes up and then it collapses again, did we take over our previous record? Did we go over him? No, absolutely not. We're still inside. It's the buyers and sellers are having a battle. And then they come down again. But yet once again, we ask ourselves, did we breach our previous record? No. So in this entire scenario, when you look at this, we're working in what looks like a really badly drawn range. There is no uptrend, there is no downtrend. Okay? All of this is trading within this channel here, going sideways. All this trading is happening inside this zone. So, let me ask you this now. Now that you understand this trading is happening above the top yellow line and, below the top yellow line and above the bottom yellow line, if all the trading is happening inside those barriers, how do you trade a range? For those of you who know what a range is, how do you trade a range? Where do you buy and sell? Well, buy low, sell high. I think that's the concept of trading in general. Okay. Buy at the lowest point, sell at the highest point. Okay. Boyki, it's not a clear range, but we haven't had a proper direction either. No higher highs, no lower lows. We're inside a trapped area. Okay. All right. So Now, taking you guys to the next level. All trading happens around these edges. Okay? Support, resistance, supply, demand, extremes, and all the stuff. We're gonna put that aside for now. What we're gonna do is we're gonna look at this as if I see an opportunity to buy here, for example. Okay, for those of you putting complete, okay, I'm gonna clean this for you guys, and I'm gonna redraw just the top part, and I'm gonna redraw just the bottom part. And this area here where support kept holding and holding and holding and holding, a person who's really focused at looking at the immediate picture and doesn't look at the big picture. When I say big picture, I mean reading your entire chart and not just looking at what's happening now. What do I do now? Or do I just buy? Do I just sell? Like when you get rid of that immediacy and just look at what's going on, what's happening, then you'll see people who are trying to buy off the support, it becomes a bad idea because you know buying in the middle of extreme edges becomes risky. Abby, yes, I'm out in China right now, so it's Chinese New Year's. I'm in Shenzhen. Yeah, it does sound like a war zone. So, yeah, even Diwali is similar, yeah. Right now it's 11:33 p.m. And it's going to probably head on for like a couple more hours going into the night, late night. And tomorrow is going to be even more, so. Yeah. All right, so now as it comes down to the edges, now, for those of you who said buy towards the bottom, right? Now, think to yourself, if this is the bottom here, most people are waiting for, let the market come here, and if it touches this area, I'm going to buy it. Okay? MRC, we'll get in. If there's any personal questions on my location and my next spot or my previous spots or anything, we'll discuss that in the last 5 minutes. But right now, let's stick with this for, so no one loses the train of thought. Okay, so most people at this point, they're looking to, excuse my language when I say most people. I don't mean to sound rude. It's just I'm trying to explain a point here. So towards the bottom is where a lot of traders are going to try to buy it, right? And they're waiting for this area. But in this wait for this area, so step one, understanding that this exists. Step two, knowing when to take the trade. Now, here's the thing. When the market's pushed down, okay, everyone think rubber band man. He retraced 50%. And then he came down 80%. Did he beat his previous record? No, he didn't beat his previous record. Then he went up. And then he took another rest. He tried again. Did he beat his previous record? Then he went up. Then he attempted again and started dying out. And when it broke that previous record's high, anyone looking at this can be like, this seller has now died. I am closer to the edge now. I'm not trading from the middle of the range. I'm closer to the edge. And it still, at this point, looks like buyers are still in control. And this deep retracement is over. Any of the stuff to the right at this point, we haven't seen. We're not magicians. Right? We haven't seen any of this. Up until this point, it's buyer territory. This is just a retracement into the buyer territory. a very struggling retracement. Notice how deep the buyers keep pushing back. And that's where the first buy begins. Okay? Now, those of you who are supply and demand traders, well, a beautiful demand area here, right? Drop, base, rise. Okay? And you can look at the demand as how is the market coming down? It's slowing down to the demand. So it's like, that's a good sign. Okay? Everyone with me so far? So I'm trying to bring in your own techniques too. That's why I brought in supply and demand. If you guys like support resistance, I can bring that in as well. If you like, Fibonacci, I can bring that in as well. The fact is, all of these things are only tools, for you to do the real thing, which is trade and read the chart. So you need to learn to drive. Whether you have a leather seat or special air conditioning, it doesn't matter. You need to know how to drive. So put all the tools aside and focus on the driving first. Then you can put any tools you want and you'll do just fine. Okay? Is it better to look for a trending pair? Boyki, it doesn't really matter. You can trade in any condition. You can trade in trending or you can trade even a range. The ability is most people have a struggle, even I have a struggle with adjusting and at the right time, because there is one style of trading when you do trend trading, and there is another way of trading when you do range trading. But once you identify it, you can do the switch. So the practice goes into identifying when the state of the market has changed. Okay? So you can work with that. You have to flow with the market. Be like water and adjust. Okay? Jen Sora, after it corrects to 156, I'm sorry, I don't think this is this chart. Boyki, which do you prefer? I prefer trend trading. However, the trends that I trade are inside ranges of a higher time frame. I don't know if that would make sense. Like, for example, if I'm trend trading this uptrend here, I am aware that this is inside a higher, bigger pictures range. Does that make sense? So in a way, everything is a range, and in a way, everything is a trend when you look at it like that. But you must know where your trend is. Okay, and I can buy down here, but as I get closer to up here, I don't want to buy anymore. As it gets higher and higher, I don't want to buy anymore because I know what location I'm at. So that starts freaking me out and like, okay, slow it down now. The money was down here, it's done. Okay? You would establish the extremes, then we are inside. I'm sorry. Yeah, in this case, yeah, we're inside this extreme areas. Okay, no higher highs, no lower lows. So it's like a range, right? Now, okay, to make it sound even or look even more better, this looks very confusing, right? Like a bad range if I do it like that. Now, if I do it like this, would you guys see it as a definitely nice consolidation now? Easier to see it now, right? It's the same concept. There is no higher highs, there is no lower lows. The market is just consolidating, i.e. range. It's one type of a range. Make sense? Okita, are the angle steepness, it's going down or up, can it determine the strength? Yes, of course, that can always determine the strength because the angle down, for example, this angle down, if this angle is sharp like that means my retracements are shallow. If my angles are not so like shallow or sharp, and it's like sideways almost. And you can see the retracements are very deep. Okay, so that's the reasoning behind an angle and why an angle of a trend can make sense. So, don't just take it for granted. Know the reason why. Why do we use the word angle? Why do we use the same word for our MAs? Oh, when the MAs are wide open. What does that even mean? Why does it need to be wide open, Is this a current chart? This is a 240 chart on the euro pound. I just scrolled back to January, but it is a live market running right here. Okay, so now, yeah, it does sound pretty loud. So sorry about that. It's not in my control, and I don't have any thicker windows. Okay, so really quick, we still have less time. We have less time now. Again, we're gonna practice. Everyone, stop with the questions. Practice with me. Now, markets. Recent low breaks all-time lows, gets lower. Right? Everyone with me so far? Comes down to this low. Then it reacts, goes higher. Okay, rubber band man goes higher. How high does he go? Okay, maybe what, 20% of this thing? 10%? Okay, he goes up, tries again, goes up, leaves a tail, tries again. He doesn't give up. He needs refueling. This is what we call a trend refresh. It takes a couple times for the trend to refresh. Okay, it's like we're giving the buyers a chance to try, but they can't get anywhere. They can't even beat their own records to go up. Okay, I wanted to discuss the difference between buyers and sellers and how you should see the markets, but because of the time aspect, we're going to just stick to the flow for today. Okay, so the market's then pushed down. Now, at this point, who's in control? Boyke, yes, I do trade. I trade a lot of counter trend, literally a lot of counter trend. Okay, bear flag. Okay, MRC, bear flag. Explain a bear flag. What does that even mean? Okay, so up until this point, sellers are in control, yeah? So now that the sellers are here, the buyers start to retrace and goes higher and higher and higher. Now, those of you who are looking at this as support equals resistance, can look at it like that. Those of you who look at it as supply and demand, you have a drop base drop again. So there is a little supply in here. However you want to look at it, there are levels into this area that can come coinciding, but it doesn't have to reach your level all the time. The fact is knowing, is it slowing down? Is it dying? And once it dies, when do you step in? Okay, so I hope today's lesson was useful for you guys today. And if there's any questions, go ahead and email me. That's fine. My email address is navin@forexwatchers.com. If you want to join Forex Watchers, I'd like to tell you guys we have some trial spaces open. And as always, it's wonderful to be here. Thank you, FX Street, for having me. And you guys are a wonderful crowd. And good luck to you all. I'll see you guys next month.